If you go to number two, customer due diligence and enhanced due diligence, because your loan officers are the ones who are actually contacting the customers. They're the ones who review the documents. They're the ones who actually are paying attention to some of the payments coming in. They need to know what they're on the lookout for. And so they really need to understand, that customer due diligence is more than just figuring out their ability to repay the loan. Okay, you need to have enough information about that customer so that you know that there's nothing unusual going on. And in some case, you may have to pay attention to more than just the borrowers. Maybe there are other related parties that you're going to have to gather information on that might have absolutely nothing to do with your borrower's ability to repay this loan. This is not underwriting. This is creating a customer risk profile, which is also part of your job. Okay, so that there is a relative disconnect out there between mortgage loan officers or even just commercial lenders or whoever they might be, and understanding that this is also your job. It's not just making sure that this loan, that your collateral is secured and you've gone through all your underwriting steps. We also have to have this customer risk profile, and do they really understand how that works? Also, be on the lookout for when is enhanced customer due diligence necessary? When are we going to have special rules? And are they on the lookout for things like foreign nationals or offshore entities, unusual sources of either the cash or the income, or unusual sources? Where did this collateral come from? Wait a minute, how are you related to this property or this collateral, whether it's a car or cash or whatever? What is your relation to that? How do you know if it's unusual if you aren't even determining what is the source of that collateral? So that's probably something that is a different way of thinking about things than your kind of average loan officer might be thinking it through. And then, of course, loans secured by assets in high risk jurisdictions.